Good evening, everyone. Today I'm going to be talking about the best opportunity on the stock market, not true for legal purposes, Sezzle. So you might be thinking, looking at a forward price to earnings ratio of 15, right, and see triple digit growth rates. You might be thinking, okay, so this business must be horrible for the long term, or the industry must be horrible for the long term, right? But the truth is, I think the reason why Sezzle, this buy now, pay later company, is so undervalued is because it is a buy now pay later company. I think the buy now pay later industry is undervalued as a whole. And I believe that this is true because there's a lot of fear in the market around buy now, pay later, right? Phantom debt, people financing their burritos, people financing their groceries, right? All these different things that just push people away from it as an investment. Now, I want to take a look at maybe not a similar case, but a similar idea, right? So I want to take a look at waste management. Back in '89, Peter Lynch, one of the greatest investors of all time, mentioned waste management in One Up on Wall Street, right? And he mentioned it as a strong investment for his own portfolio. And take a look 30 years later, and look, it's a 100-bagger, right? And the S&P 500 returned around, go back to '89, 20 times, right? 20x your money, this 100x your money, right? 20 bagger versus 100 bagger. So obviously very strong outperformance from waste management. Now, why would I not invest in waste management in 1989? The reason why is because it operated in a boring industry. Waste. It operated in trash. I didn't want to go invest into a trash company when I could be investing in one of the greatest tech revolutions of all time, right? What's so interesting is that people don't want to invest in what's scary, and they don't want to invest in what's boring, right? They want to invest in the new tech stuff, right? Like Nvidia, Broadcom, all these fun stocks, right? All these exciting companies. But I think buy now, pay later is providing strong earnings, and they're providing really good fundamentals that might be able to support really strong investment theses in the long term. And today I'm going to be answering the question why Sezzle is the largest position in my portfolio by a long shot, and actually the largest position I've ever taken by percentage in my portfolio ever. And I think the reason why Sezzle is better than any of these other BNPL companies is because of their business model. They have one of the strongest business models I've ever seen, especially for the credit industry. Now, why is this true, right? Why is it that Sezzle has such a strong business model? It's because of their subscription service. Now, I know you were thinking, everyone has a subscription service. How is this subscription service different? Well, premium subscription allows you to use their product with their integrated merchandisers, so with the companies that they've already had agreements with. And then Sezzle Anywhere allows you to use the Sezzle card anywhere Visa is accepted, right? So wherever there's a card reader. And their last option is on demand, which actually doesn't require you to get any subscription, and actually allows you to have a single use card that allows you to just use it one time. You get a service fee, financing fee, then you're done with it, right? So why is this so valuable? Why is this such a strong business model? It's because they are offering something that no other buy now pay later company is doing. They're offering responsibility through buy now pay later, right? This is the core worry about buy now pay later, that they're racking up phantom debt because the bureaus can't see it, right? Well, Sezzle isn't this way. They have Sezzle Up. And this is something that you actually do have to enroll in, but still it's very helpful for those who wish to build their credit, who wish to build their financial future, right? None of the other companies are providing the service through a method of a subscription service. Now, you could argue maybe there's some other companies out there that might have the credit reporting. But what Sezzle is also doing is that they're providing financial freedom lessons, right? They're providing a way for you to become financially free through their courses that they have integrated within their app. This is called Money IQ. Now, you could argue, I can go onto the internet, I can go on and find information about finance, right? Well, the truth is these are people who are maybe not that interested in finance, people who are not really interested in personal finance, because buy now, pay later customers, these are people under 40 usually, right? Typically under 40, and especially people who are just graduating from college, people who don't really have a lot of idea of how credit works. So Money IQ really provides a helping hand, and the credit reporting really provides an ability for you to begin to integrate with credit in a friendly manner. Because give a kid like a $5,000, $10,000 credit limit right out of college, and they're going to blow it. They're going to screw their account, and a lot of them are going to get screwed by the 20% compounding debt, right? Buy now, pay later might have those late fees that everyone talks about, that everyone's scared of, but $7.50 or $15 is nothing compared to what 20% is going to do to you 5 years down the line. So this is a much friendlier way to be introduced to credit, and something that might not ruin your entire life very early on. Now, what separates BNPL to credit cards, the typical nature of the credit industry, right, is the fact that they're really only monetizing from the merchants, right? This is a graph from Affirm. This is not Sezzle. This is Affirm's take rates, right? So we're not going to be looking at this yellow, red, or purple line because these are monthly installment loans. We're going to be taking a look at Pay and X, which are BNPL products, right? So these are sitting at a 5% take rate. This is what we're going to be expecting in general for the buy now, pay later industry. And this is around what Sezzle is sitting at. Buy now, pay later is able to charge such a high take rate because they just have such a high conversion at checkout. People are really going to be using buying your products when you offer buy now, pay later services. So the merchandisers are willing to front the fee of this higher take rate. Now, 5%. Now let's go back here. Let's take a look at the subscriptions again, all right? So we take a look at premium. Now let's take a look at premium. What would you expect a company to charge for their just ability to use BNPL? We take a look at Klarna, they're charging around $5 per month just to use BNPL services. Well, Sezzle is charging 3 times that much just to be using buy now, pay later services with their integrated merchandisers. They're charging 4 times as much, $20 per month with Anywhere. This shows and illustrates that Sezzle really does have pricing power because they're not just doing some degenerate shopping platform that people like to paint Klarna as, right? They're actually providing you a helping hand through the struggles of debt and through the struggles of learning how to manage their personal finances. And they're actually providing a fundamental different product that people who are in rougher financial situations are willing to fork money over for. And this is the final point I would like to make with the subscription service. This is kind of a weird analogy. Just kind of thought of this one a little while ago. But let's say I buy a $1,000 computer, right? I buy a $1,000 computer. I've done all the research. I've done all the looking into it. And I enjoy using the computer for like maybe a day or two in just a specific situation. Now, let's say my neighbor walks over and is like, hey, I'm not using my computer anymore, and just gifts it to me, right? And let's say the computers are of similar performance, offer the same thing, and do everything exactly the same. Which computer am I going to use? I'm going to tell you now, I would use the one that I purchased because I want to reason the fact that I went to go out and went to purchase the laptop and put all this effort into. I want to reason that I'm going to be using that laptop. Now let's take a look at it with Sezzle. I buy Premium or I buy Anywhere and I'm subscribing to them. I'm going to use these services far before I'm going to use any other, not only buy now, pay later services, but any credit services. I'm going to use Sezzle instead of any other lender. And this fundamentally wins the game of getting you top of wallet, which is the most important game that all lenders are playing. It's a genius tactic that actually brings the consumer to psychologically use the exact service that they're paying to use, right? So they're going to reason to use that card every time. Just like how if I have an Amex that I'm going to pay $900 a year for, I'm going to use that Amex at most checkouts because I have to reason the $900 price tag, right? So I think that's a very interesting way to start to take market share from other BNPL companies and to really integrate the consumer into your platform. All right, fundamental investors, now that we've looked at the business model, we get to do the fun part, right? We get to look at all the financials. All right, let's take a look at GMV. This is the most important statistic to look at, not for Sezzle actually, but for the merchandisers. This is really important to understand how successful the merchandisers are being, right? This is important to understand how strong consumers are. But if merchandisers are strong and if consumers are strong, Sezzle's going to be strong generally, right? And we're going to be seeing a very strong growth rate, 58.7% year over year, right? And we just hit $1 billion. So congrats to Sezzle and GMV. But why exactly is this happening, right? So if we take a look at revenue, come all the way down. If we take a look at revenues, right, we're going to be having transaction income. This is going to be the merchant side of the equation, right? So this is where I'm getting that 5 to 6% take rate from. This is where buy now, pay later companies are mostly focusing, right? And we're having a 63% growth rate in that, so roughly in line with GMV. And then we're going to be taking a look at subscription revenue, which is actually what separates Sezzle from all the other companies, and we're going to be looking at a 6.5% growth rate. Now, I know what you're thinking. This is low, isn't it? This is not what we want to be seeing if this is what Sezzle is looking at. And I do have a rebuttal for that I will show in a second. But let's first look at this, because I'm sure you saw the 200% growth rate from income from other sources. So what does this consist of? This mostly consists of the increase of late fees that we're seeing for the Sezzle business. This probably plays into that predatory mindset that we have for BNPL often. But the truth is Sezzle is going to be charging around a $15 late fee, while the card companies are charging a $40 late fee. And buy now, pay later companies aren't charging interest. So let's say I miss every payment. I totally miss every payment and I owe 60 total dollars. Well, now let's say I don't pay off my credit card, and in 5 years, I realize my balance has significantly increased from whatever, like maybe $1,000. So now we have the 20% compounded, and now you're screwed. It's much worse than the late fees that you'd be looking at. Looking at more like, I don't know, like $1,200, $1,500 in just straight interest if you haven't paid that down correctly. Now let me reason the subscription, the lack of subscription growth, right? The 6.5%. So let's go to the marketing side of things. So if we take a look at marketing, we actually see almost a 4x growth in marketing. So marketing is really being emphasized now. Why is this? Because in 2022, Charlie fixed Sezzle. He did all the hard work, he focused up, and he learned how to make Sezzle profitable with their subscription service. They did all the hard work in 2022. They started monetizing in 2023. They really started to turn profitable in 2024. And now we are here in 2025 where we can focus on bringing more growth into the company, right? So now we're 4xing our marketing and advertising and trade shows, and we're able to really reach out into the world, bring people into the ecosystem, and keep them there because of some of the effects that I've talked about before. And now this can bring us to our growth and organic growth, right? So our active consumers. And active consumers are actually not the best way to measure the health of Sezzle. The best way to measure the health of Sezzle is monthly on-demand users and subscribers. These are the people who are using Sezzle for long periods of time, are going to have high lifetime value. And I can say this as a general thing, because even though on-demand is a single-use resource, subscribers have grown in line with on-demand. So let's go back to our presentation here, which is available on the Sezzle Investor Relations website. We can see 1517 to 568, 10%-ish, 190 to 216, and orange is monthly on demand, and green is active subs. This is also around 10%, but a little higher actually. Yeah, a little higher than 10%, but maybe like 12, 13. But we're seeing that they're roughly in line with one another. So people with higher lifetime values, people are going to be using Sezzle more. These are the people that really matter to the Sezzle business model. So we're looking at 11%, which obviously is not slow by any means whatsoever, but it's just, I think that this is going to increase as we increase marketing and as we increase exposure of Sezzle into the ecosystem of buy now, pay later. Now, I don't want to go through the entire SEC document. I'll leave that fun for you. But let's take a look at the Adobe Analytics. And I was really excited to see these when they came out. Shows very strong consumer spending, even with all the fears we've been having. 6.8% growth in total season spend. And look at that. We get our own section, right? Buy now, pay later spend, 10% growth year over year to $20 billion. So just nothing I'm really doing scientifically here. Just see 10% and am happy to see the strong growth in buy now, pay later spend. Now I would like to talk about why I think Sezzle is a great long-term investment. So let's take a look at the CEO, Charlie Youakim. So Charlie is a serial entrepreneur. He actually founded a company before this called Passport. I'm not going to get into that, but if you want to go take a look at it, there's various interviews with Charlie that are highly interesting. And even an interview with on X that I was watching the other day. Very good. Highly recommend you go check that out. I like Charlie so much because he references a Munger or a Buffett quote at the end of every earnings call. And Buffett's someone who's had a huge impact on my life, someone who's really taught me some of the ropes of investing, value investing. And I'm really interested in what Buffett has to say. And it really attracts me that Charlie also is into learning from Buffett and Munger. And I find that very valuable to have in a CEO, someone who has that long-term shareholder minded mindset, right? And on a different note, I actually want to talk about something that might make you stray away from Sezzle at first, but I think it's something important, something interesting, and something I'm actually very happy about. There is a very large short interest on Sezzle, like very large. One of the most shorted companies in the stock market, in fact. And the reason for this, I believe, is because you go out, you look at buy now, pay later, you choose Affirm or Klarna, PayPal or Block, right? Which is Afterpay. You choose one of the big players, you buy shares in them, and to hedge your bet, you short Sezzle, right? Because these are the big players, these are the big market cap companies, and Sezzle is just another buy now, pay later company in the mix, right? So there's a lot of short interest against Sezzle, and this does two things. First off, it lets me buy cheap shares and hopefully buy more cheap shares before the earnings call, which will be happening sometime in March, I believe. And it also provides the opportunity for a short squeeze. Now, this is the strongest indication of Charlie's owner mindset. Charlie owns a massive 43% interest in Sezzle, a 43% interest in a company that is what, 2.3 billion right now, trading 2.3 billion. 43% interest in the company. He is the original founder and he's the CEO. He has a long-term mindset at the company. And I can prove this because he has never sold a share, even on this graph, right? Even during periods of peak valuation, not a single sold share. So I believe Charlie's in for it for the long haul. He's here to stay here for a while. And they've also applied for a banking charter, and that's a process that takes years often. And I think it's very useful for Sezzle, and I think it's going to allow them to provide some banking services that go along very well with some of their BNPL services. So that's really exciting to see, not only for the business, but also for the fact that Charlie is definitely invested in growing Sezzle for the long term. All right, let's do my favorite thing on YouTube and read some comments. So this is something that I read watched just a few days ago, the buy now pay later video from the Wall Street Journal. And as you can see, the comments are very negative. No one really likes the buy now pay later industry, it appears, as I was saying. Now, I like this comment in particular. Giving people credit who wouldn't be able to normally sounds awfully similar to the subprime mortgage lending crisis. Now, obviously, this is a sarcastic comment. We're not going to have subprime burrito lending bring us into a crisis, right? But it does unveil truth about how people feel about the industry, right? And buy now pay later has the ability to underwrite much stronger than the underwriting of, say, the mortgage crisis. Because when you're getting a loan, you have to put a 25% down payment on the thing that you're trying to buy with buy now pay later, right? So I'm trying to buy a $100 burrito. I have to put a $25 down payment on it, right? And then I have to put a 25% payment every 2 weeks. This is actually so helpful to people under 40 because this is going to line up with their paychecks, right? You get a paycheck every 2 weeks. You're going to be able to easily pay off this debt. So it kind of acts like an integrated way of being responsible with your debt. And also, the companies are able to see how you've performed on your 42-day-long loans, because 6 weeks times 7 days, 42 days, they're going to be seeing how responsible you are with your credit products. And if they see that you are not good at repaying your debt, they can shut you down. They can shut you off very quickly, very unlike me going out and buying a home with a 30-year mortgage. What I find the most interesting about the hate towards buy now pay later is it's debt. It's credit, just like how if I use a credit card, just like how if I use it's debt that allows me to buy things because I don't want to front the money now. I use debt pretty much on every purchase I make with my credit card because I get 2% cash back. What I find so interesting about buy now pay later is just like credit cards, it's pretty much the same amount of time, except there's no interest, and it's lining up with a consumer's paycheck, and it's also making you front a 25% down payment, right? So it appears to me like it's more responsible than credit. I think the reason why people think it's a joke and why financing your burrito, paying like $5 installments, because it's funny, right? Paying $5 installments on a burrito that I have to pay $5 every 2 weeks and then to afford the burrito, right? In quotes. It makes it feel kind of degenerative, right? Instead of me just putting it on a card and then paying it all off at the end of the month, right? So overall, I'm really excited about the opportunity. Next 5 years at Sezzle, I think there's going to be some explosive growth, and I think that it's going to be a really fun opportunity. This video provides no financial advice, and you should always do your own research before investing in any company, especially one that has a 5% move every 5 days, very volatile company. To invest in Sezzle, you should be very sure about the fundamentals, and if you're interested or want to learn more about more companies or want me to react to this video, then I would love to hear your feedback, and if you want to subscribe, be able to see more of my videos in the future, I would appreciate that. Thank you.